All right, what up, yo? Here's my daily breakdown for July 4th. So let's see. Basically, these pairs here all need the 4-hour shift. This needs the USD SEK needs the daily shift of structure. So if we go to the daily, uh, right here on the daily, you can see that we're looking to sell this down to this weekly structure point down on here, but we're currently bullish. This is the higher high, this is the higher low. So we need to first break this higher low, then we can go lower. So that's not going to happen. These pair here, so use the SEK, Euro USD, USD, HUF, NZD USD, and GBP CAD all need a 4-hour shift. So you can see on the daily, it's bearish, bit bullish, bearish, bullish, but as you can see, like they're all making proper structure, right? So now if we go, let's start off with USD DKK. So on the 4-hour, this is currently bullish, right? Because this is the higher low, this is the higher high. So we need to shift structure to bearish, then pull back, and then we can look at this on Euro USD. Same thing, this is bearish. So we need to shift structure to bullish because the daily is currently bullish, making higher high. This is the higher low. So we need the 4-hour to do the exact same thing. USD HUF, you can see the daily is currently bearish lower low. We need the 4-hour to also be bearish lower low. So this candle is about to close in about 27 minutes here. So if it does close below this higher low, then we need a pullback. So we're going to look for something, if it starts to pull back right away, let's say it closes like that. We needed to pull back to some sort of 4-hour area of interest. How far back is this? 2023. Let's see if there's any sort of so there is some sort of area here. Actually, we're going to be not even close to that. How far back is this? 2023. So there's a bunch of areas here. We basically just needed to tag like 3 points. So let's say something along this point here. So let's say it breaks, right? And then pushes lower and then pulls back and the area of interest lines up like that. It'll be interesting because we have all those taps back here and all these taps back here. So it makes sense it pulls back because we wanted to align with the fib for that confluence along with the 4-hour area of interest, right? So NZD USD daily is bullish. So we need the 4-hour to also be bullish. 4 hours currently making lower lows and lower highs. So we needed to break this right here, this previous lower high, and then pull back. GBP CAD daily is currently bullish, so we need the 4-hour to also do the same thing. 4 hours currently bearish. So if we go back, basically what we'd be looking for is since the daily was like, for example, if we were to like go back like there when it looked like this, right? So it pulled back, right? So it's making higher high, higher lows right here, higher highs right here. This is like a daily wiki zone because I know like daily keeps rejecting once it ever gets into this zone on the daily on here. But on the 4-hour, you can see that the 4-hour was also higher high, higher lows right here, right? So it pulls back. We have to wait for it to, if it's going to pull back, we need to wait for it to tag us in here because we're not going to even bother waited until it gets there or this point here. But not only that is we also needed to have once it pulls back deep enough, which once it pulls back to this area means it's pulled back deep enough, but we also needed to combine with a area of interest, right? So as you can see, there wasn't really at this point here when it pulled back here, it wasn't aligning with any zones. Like there's no taps and this is all the way back here, nothing, right? So you need it to combine. This tells you that it's pulled back deep enough or it's pulled back to an area where price is likely to react, but you also need the fib, right? So once it's pulled back here, we're like, okay, cool. But we don't have an area of interest, so we'll keep on waiting. Pulls back here, you can see we have 1 tap, 2 tap, 3 tap, 4 tap right here. That's the only place that has a valid area of interest, right? Um, my bad. One, two, and then when this 4-hour candle closes here, then you have that third point, right? Because you need at least 3 zones where it makes support or resistance. So when you go bullish to bearish, that's 1 point. Bearish to bullish, that's another point. Bearish to bullish, that's another point, right? So now we got that point. So then we would then go down and look for some sort of shift of structure on the time frame. So on the fifth, so I'll go on the 30 minute because before I used to wait for everything, you don't need to wait for everything. This is not aligned because you can see lower low here, or lower high, lower low. We go to the 5 minute, however, you can see the 5 minute has shifted structure. So right here, you can see that this was because this is a lower high right here. So you can tell it's a lower high because you can draw that little bend right there. This made the lower low right here, okay? So once it does that, you then need it to create an accumulation level, break and retest it. So if we fast forward, we might find one in this time frame. Let's see. We're still bearish currently because this here went bearish. This is the new lower low. This is the new lower high. So once we break that, we've gone bullish. So, and we're at the area of interest because this green line here, that's the area of interest where the 4 hour has been known to react. That's why it's struggling like that. Okay, perfect. We've broken above right here. So as you can see, no, we haven't yet because it's still that level. So we need to wait until we break that. Perfect. We broke it. Now we're close to the area of interest, right? So this is a good because we're always buying and selling off of support and resistance, which is this area here, this 4 hour area where price has made bullish to bearish and then bearish to bullish consecutively, right? So now, okay, now we're officially bullish, right? So now we need to find an area where we have a neckline here, accumulation level. So let me just delete this box here so you can see. So let me delete this here as well too. So here you can see that this is an accumulation level because you have one tap, two tap, three tap, four tap, wherever the wicks are, right? So we've came back, we've retested it and engulfing right there. So we got the engulfing. This was the last point before price had shifted to. Actually, I would do this point right here because point price went from this is the last lower low right here before price decided to then start shifting upwards, right? So then we go here, go 5 pips below, should be here. Put your stop right there. And usually I would target a 3R, but this one, as you can see, it didn't make it there, I'm pretty sure. So oh, kind of messes around. It's easier just to do this on higher time frame. Let me go back and make this visible on all time frames. So yeah, I believe this one only got to like the next fib level up there and then it pretty much tapped out right after it hit it. So didn't actually make it to the 3R. It only got to like a 2.65 and then it started shifting structure again. So you can see right there, tapped into that level. This is a daily area. Let's see here. So then we could do the exact same thing once it gets there. We just need to find like, let's see when it didn't even give us a chance. So as you can see, it basically got right there to 2.65 and then it fully reversed. So this was the last lower high before price shifted, but this here is the structure that we're retesting and going off of. So we could put it below here. Usually I find it safer to put it below here, but if we'd put it below here by 5 pips, that we would have definitely hit our 3R. So here, go 5 pips, which is right here. So you can see it hit 3R and then it reversed. So going forward now, we're basically looking to do the exact same thing. So here we need a proper, on USD MXN, the daily is bearish. We didn't tap into the take profit yet, so we can look for it to pull back on the daily, which is gonna be on Friday. So basically this is done. We're not gonna be able to trade this because yeah, next day it's gonna pull back, and then when are we gonna have time to actually do all the 4 hour stuff? That being said, if we look at the USD PLN, The daily has pulled back. The 4 hour, we're looking for the 4 hour to shift structure. So this here is the 4 hour high or low. So when the 4 hour breaks that, we actually need it to pull back and then we can look at, oh, actually, no, sorry. This is the lower high right here and this is the lower low because none of that structure point. So this is good. Um, so then we would need it to pull back to 4 hour area of interest, right? So when it had pulled back, it pulled back to we have basically one touch here, another touch right here, and then another touch right there. And the weekly area of take profits right down there. So we've pulled back to past this zone here or to this zone right here. So that's when we're going to start being interested to see if there's any area of interest. We then have one point where it went bearish to bullish, where it goes bullish to bearish, and then this third point formed right here. So now we have a valid area of interest. So once we have a valid area of interest, we're still looking for that candle to close in our direction, which would be the 4 hour candle. So we have that started, and then from 3 p.m. down, we can start looking for entries. So again, we go down to the lower time frame. I like to do it on the 15. This here, I was basically testing to see if we can do this with just a shift of structure without a proper accumulation level, and it got smacked right there. So lesson learned. Here you can see that we went bearish. We then, right here, this is the higher low. Price then went bullish, broke the higher high there, and then went bearish. And not on the 15-minute because there's no accumulation levels here because you only have, let's see, actually, let me zoom in and check. So we have on this space right here, what do we have? We do actually four. So 1, 2, 3, 4, right? And this was the last point before price shifted to bearish on this time frame. So that's what I was saying before on the other one, if we had cheated and put it, the way that we did on here, this would get smacked because then you would just put it above here, right? Versus putting it above the proper point. So on that, the GBP, it would have went to 2.65 and then fully reversed on you. But versus if you did it properly, if you cheated on here and only did it to here and it's an exotic pair, so you add 50. So we'd be at basically like 110.06 right here. Then you would have gotten smacked, right? But if you put it above the actual right here, 85.20, this would be valid. And then you have plenty of room to actually try to get to the take profit on here. And you only don't need to take it all the way down there. You can just go for a nice 3R. And that's what we'd be looking at. And Euro GBP, this we have daily is bullish. We had the proper pullback. The 4 hour, nice pullback deep. We are currently at an area of interest, but like I said, like we want to take it once we get to these valid points. So it's not here. Like if it gets back into this area here, this is how I check it. Basically, let's see if there's an area of interest in this zone here anywhere. So we go from here to here. Um, how far back is this? 2024, still valid. So we have one touch, two touch, three touch, four touch, five touch, right? It's a pretty valid point. So if price gets back to here, there's an area of interest in here, so I'd actually be interested in that. But right now it's at this level, one touch, two touch, and three touch, but it didn't pull all the way back to here. So that's why I'm not interested in this level here because it's not like it hasn't pulled back deep enough. I'd only be interested in taking it at these zones. So either here you have, one touch, two touch, three touch. If it pulls back here, you could possibly get a rejection on the 4 hour, and then we can look to take it up again. Versus here, you have it, but you don't have these fib levels as well too. So doesn't really make sense. And even though right now, if we go on the 15, you can see the 15 went bearish, the 15 went bullish right here, right here, and then we go back bullish, pull back, bearish. We go on this accumulation level right here, and we have this proper sequence as well. On the 5 minutes cleaner, you can see it. You can see right there, accumulation right there. Price comes back, retests it, and you get an engulfing right there. But it's not at the fib levels. We needed to pull back a little deeper. So if we had said it, our stop loss would have been right here. And this is the perfect spot for price to come back and hunt it because it needs to pull back deep enough, right? So right when it pulls back there, that's where I'd be looking to enter, right? So if I entered now, like it's a very risky spot because this is where we usually enter on. So that's why I wouldn't be interested in entering here because this is just the perfect spot to grab liquidity and then go take a trade. Euro JPY, this ended up playing out from last week basically. But with prop firms, they don't like you to hold your profits like that. Like they're like, okay, if you go in this much drawdown, like we're gonna close it down, even though it didn't hit stop loss, they just have like drawdown, trailing drawdown limits. So basically, yeah, we're in the fib level area. We pulled back, we have an accumulation level, or we have also areas of interest. We have bearish to bullish, bearish to bullish, bearish to bullish, right? So you come back, then you go on the 15, as you can see. Last point before price shift structure is down here. Delete all this. It's simpler to see right here. So you would go 5 pips, which should basically be right here. And as you can see, we have that accumulation level. So we're right here. This one I wouldn't bother with because this is the actual fib levels right here. So we have this accumulation level right at the fibs. We have the sequence where we have price goes bullish, pulls back, engulfs on the neckline here, add the accumulation plus the fibs. So you enter right here, stops right there, and basically gets a 3R and then reverses, right? Yep, every time. So again, here we have the fib level is right here, and then we have the same sequence where price goes, we have the accumulation level right here. It's probably cleaner on the 5 minute, but price pulls back. How much did this pull back by? I think this pulled back by too much for me to be interested. Yeah, plus 5 pips. Um, this is on a lower time frame right there. So plus 5. Price is at the level right here, and the area of interest. Price breaks, pulls back, and doesn't look like there's an engulf in here. Let me see in the 1 minute. So right here, you can see the sequence right here. The accumulation level price also goes from bearish to bullish at the area of interest. We've already tapped into this level on here on the fibs. So we know that we're at a good spot. And then we get an engulfing right there, right? Breaks, retests, engulfs right there. And this engulfing did not violate, yeah, by only 1 pip. So we're good. We have, yep, perfect. So the last point before price goes bearish, 5 pips right there, and target right here. And what does it go to? Goes to 2.99 before reversing. So if we try to hold on just for three, we would have gotten smacked. So sometimes it's good. One time I basically I didn't hold it and it kind of screwed me over. But this time, if we held it, it would have really screwed us over. So it just depends. Here we have the accumulation level. Price went bearish to bullish. Last point is here, but I would have counted this level right here. So right here. Shoot. You do it properly. I like to use, where is it? Right here. Yeah. And perfect. Yep. There we go. So 3R right there. And then price obviously reverses after. But yeah, that's the strategy basically. Just combine the fib levels. This is the fib level right here, and the other one's right here. So these are the fib levels. Combine it with the 4-hour area of interest, combine it with the shift of structure and the proper accumulation level, which is always 4 wicks. Combine it with a proper stop loss, which is always the higher last higher lower lower high before price shift structure. So this would be right here, last higher low before price shift structure to bullish, and add 5 pips and target 3R. And as long as you do that, you'll be pretty good.